All right, you're welcome to another lesson. Okay, in this lesson, we'll be looking at the second categories of candlestick that traders should focus more on. You can check out the first categories, which we look at from the previous lesson before this one. Just go back to the video before this one. You will get the knowledge of the first category and how to trade them and the factors that you need to consider before, accepting the candle as valid. Now, for today's lesson, we'll be looking at candlestick with obvious wick. The first category was candlestick with big bodies. Second category is candlestick with obvious wick. Now, we'll be looking at the factors that we should consider before confirming a valid candlestick with obvious wick rejection. We'll look at the factors. Like I said in the previous video, you don't just jump into the market because you saw a candlestick with obvious wick rejection. No, you need to consider some factors. And the same factors you considered in the candlestick with bodies is the same factors you also consider when you're talking about candlestick with obvious wick rejection. Now, I'll give 3 different examples so that we can get the full knowledge of what I'm trying to share to us. The first one will use a bearish market, that is the trend. The second one will use a bullish market, and the other one will use a reversal market. So a market that reverses from bullish to bearish. Okay, the factors are similar with the one for the first categories. Okay, firstly, I said you should always consider the location where the candlestick is being formed. When I say location, I mean the location on the chart. Okay, is it forming on a resistance level or on a support level? This is very, very, very important. Very, very, very important. I believe you still remember the golden rules. Only look for selling opportunity on the resistance level and a buying opportunity on the support level. Very important. Okay. When we get into the chart, you get to understand it better. Now, the second factors we have to consider is the market trend. The market trend. It's always safer to trade with the trend. It's trading against the trend, but no, but it's safer to trade with the trend, most especially if you are new to trading. It's very, very much safer to trade with the trend. Just go with the flow. So it is safer to wait for the candlestick to play out with the direction of the trend. I know somebody will say, but wick rejection candle is a reversal candle. What are you talking about going with the trend? Yes, that's why I said I'm going to show us 3 different examples. I may do it in 3 different videos so that I don't make the videos to be too long. Okay, so the first one, I will show you how you can, identify it with the trend, uptrend, downtrend, and also the reversal. But we'll start with the downtrend movement. Firstly, you consider the location. If it is support, if it is a resistance, then you apply the golden rules that I taught you people at the previous lesson. Okay, which I said that the golden rules is that only look for selling opportunity on the resistance level and a buying opportunity on the support level. Very important. Now, the third thing we must consider is to make sure that there is a break of structure. At least let there be some kind of a break of structure and a clear retracement. When I say a clear retracement, many times I don't really advise one candlestick retracement. Okay, a clear retracement, let the market retrace clearly, if possible, forming any of the chart patterns. Okay, forming any of the chart patterns. Okay, so that's the third factors we should look at. Now, before we go into the chart, let me explain what a candlestick with obvious wick rejection entails, what it means. You know, we say a candlestick with obvious wick rejection. Now, why I say obvious, there's a lot of wick in the market. A lot of wick, a lot of wick, a lot of some book, we call it shadows. There are a lot of them in the market. Why I say obvious, I mean, this one is very obvious. We will see the examples on the chart. You will understand when I said obvious wick rejection. Okay. Now, what is a wick rejection candle? A long wick candle generally acts as a reversal signal, indicating that the market may move in the opposite direction of the prevailing trend. I told us that sometimes it can also be in the direction of the trend. You can see wick rejection in the direction of the major trend. It's safer to consider those ones in the direction of the major trend, with the major trend, than to consider the ones that are going against the trend. Don't be confused. I'll give 3 different examples about this so that you can actually understand it better. Now, depending on whether a long wick is formed above or below the candle body, the market may witness a potential bullish or bearish reversal. Okay, so it is very, very important. Like I said before, take note of long wick forming at a level of support and resistance. Take note of it. Take note of it. When they are forming at a very strong support and resistance, they are better than when you see them on a weak support and weak resistance. Now, I won't talk on support and resistance based on what we are focusing on, is just candlestick, the 3 categories of candlestick. But in the next course that will be after this one, I'm going to show you how to easily get your support and resistance accurately, and how to identify strong support and weak support, and strong resistance and weak resistance. We're going to do all this, but I always want to keep my videos simple, my tutorial simple. Like what I'm showing you now, I'm trying to make candlestick so simple for you. So if you can follow this series carefully, that will solve all your problems of candlestick, whether entry, whether exit, it will solve all the problem, because I do well to always remove the noise from the market. So that is the main purpose of this video, to remove the noise from the market when it comes to candlestick. Now, for that of support and resistance, I know so many persons always have challenges in drawing the support and resistance. They don't get it accurately, but not to worry. I will show you how to get it accurately, like 100% accurately, with just few steps. You don't need to stay on it for months. In just few days, if you can practice it, you'll get it accurately. I will be ending this video here. In the next video, I'm going to give you a chart explanation on what I just said now. A chart explanation of what I just said. Now, I will use a bearish market. Then another video, I will use a bullish market. Another video, I will use a bullish market that reverses into a bearish market. Okay, so I want you to actually practice whatsoever you are learning from this course. Practice it. Practice it. If you spend 5 hours on a training and spend 30 minutes to practice, you are not doing yourself any good. But a trader that spent 5 hours to practice a 10 minutes lecture will be far more better than a trader that spent 5 hours on a lecture room and just spend few minutes to practice. So practice is far more important than just listening. Okay, so let's learn to practice and let's learn to work hard. Forex is a journey, and it's a journey that you will not regret starting, but it takes discipline, it takes consistency, and it takes being specific. Being specific. Like I told us in the first video that Forex is the biggest market so far and one of the most traded. So the only way we can survive is to what? To be specific. Okay, just watch out for the next video. Thank you very much and have a nice day. Happy trading. Bye.